All right, what's up, guys? Welcome back to another podcast of the Stock Bros. We are available on all major podcasting platforms. Before we get started, please subscribe, like the video, leave any comments on what you liked or that you didn't like. Also, you can use our links in the description for a free stock on Robinhood or Acorns. Free on Acorns, you'll get $5. On Robinhood, like I said, you will get a free stock and it'll be invested instantly. So let's get started. Today we are talking about Democrats versus Republicans and the effect that which party has control over the government, how that affects the stock market.
Yeah, so obviously there's a lot of chaos going on in the world. And there's a lot of people that are scared because we are going to be changing presidents in 2 weeks. So we wanted to provide some clarity and help people calm down. So this is not a political podcast. This is nothing to do with politics. We're just giving you data and facts that we spent a lot of time researching this, and we looked at a lot of different sources, and we didn't just go to one website and read everything on that website and take it as gospel. We actually spent the time to research everything. This was a podcast that was weeks in the making, and we actually filmed this once, and then we noticed we made a mistake with some of the data, so we redid it again. So we really want to get this right, and we're not offending anybody. This is just straight data, like I said. So anyways, let's get started. So it's a commonly held belief that the stock market and the economy perform better when we have a Republican president, because the GOP have corporation friendly approach to taxes, government spending, and it actually turns out that the opposite is true. The stock market actually performs better historically under a Democratic president. Now, that doesn't mean it's always going to be like that, but we have to go off of our historical data. So, investors have seen more generous returns during Democratic presidents dating all the way back to 1945. So, yeah.
Yeah, so since 1947, the S&P 500 has posted a total of around 10.8% around Democratic presidents versus 5.6% under Republican presidents. That is nearly double. That's pretty insane when you think about it.
Now, I do want to add, so some of our sources, we use Business Insider, Forbes, CNBC. Um, some sites I found this number did vary on some of the sites, and that's because of the date the article was written. So this article, if you go to research this, you might see a slightly different number, but overall it is about double on everything we found.
Yeah, so Republicans tend to stimulate the economy via tax cuts, and while Democrats usually try to do wealth redistribution. So there's two ideas juxtaposed against each other, but it turns out that actually people. The stock market likes when Democrats are president. Whether that's a coincidence or not, it's hard to say. It's been a long
It
time.
is hard to
It,
say.
it
Yeah.
it's been a long time. It's been many years, but still, is that a long enough time period to get a good enough pool of data to say conclusively that this can be determined the reason that the Democrats are
We think it's a reason. We don't think it's the main reason. There's definitely luck, and there's also circumstantial things like 9/11 when George Bush was president. That's something out of his control.
do
So the
you
stock market
yeah
crashed heavy then.
do you think a
So
hundred years is enough to tell, or do we need like 1,000 years to be conclusive about this?
no, I think we have enough data to make a educated guess.
So you
You
don't
know,
you don't think this is an outlier? You think that this many years, this we can conclusively say this?
I think that I think whether or not there's a Democratic or Republican president, it's kind of irrelevant, to be honest. You're still going to make money. The stock market is still going up, and it's also a big part of what's happening at that time. Like in the
Okay.
90s, you had the dot-com boom, you had the tech boom, the internet, and there was a lot of things that stimulated the economy then.
Hmm.
So, and then in the under George Bush, you had 9/11, you had the housing crisis. So,
Yeah.
There's, you could say that some of that could be their fault, some of it isn't their fault. Uh,
So one thing I want to add, could it be that Democrats are more scared to invest when there's a Republican president than the opposite? So when there's
that's definitely possible.
so
Yeah.
when there's a Republican president or when there's a Democratic president, Republicans might not care and they might just keep investing, and that's why the stock market returns are different under who's president. That's could be one theory.
Yeah, it's hard to say, but the one thing we do know for sure is the best stock market returns are when we have a split Congress,
And
and it
that
doesn't matter who the
and that
president
kind of
is.
goes to what I was just saying. Nobody is scared to invest when that
Yeah.
happens because both parties have some control. So investors from both political parties aren't going to care.
So we are seeing now, on average, over the past 100 years, there's been a 17% return rate when we have a split Congress, regardless of who the president is. We right now we actually just had a Georgia election, and the Democrats basically are in control of all three branches of government, and the stock market's actually going up right now. That's because, in my opinion, the day before there was a sell-off. I lost like 2% of my portfolio the day before, and then it rebounded all of it back. So I think there was an initial sell-off, people panicked, and then now people are just okay with it. And we do need stimulus. It's trying times. I don't want to get into politics, but
Yeah.
that could be why the markets are up right now too.
So yeah, there could be. Let me just add this in. There could be multiple factors. It might not just be who's the president, what party has control of the presidency. It could be factors such as who controls all three branches. Does a party control all three branches? That could be another contributing factor. I mean, there's more than one factor that
Yeah.
could go into it. But
So, well, let's get into the data of it, right? So this is a really good chart that I found on Forbes. Um, I triple checked all the numbers. I actually checked the returns for the S&P 500 on other websites just to verify this chart, and because it was a little bit older chart, so I verified and updated some of the numbers. So if you look at the returns of the stock market since 1945. This chart goes all the way back to 1945. It ranks the presidents first to last. So if you take the first 10 presidents, it's actually 5 Democrats, 5 Republicans. So it's a pretty even split for the top 10 returns since 1945 is 5 and 5. Now, if you want to break it down even more, Bill Clinton had the highest return rate of any president, 210% return of the S&P 500. So the S&P 500, we should probably explain what that is for people that may not know. That is the best way to get an indication of the health of the United States stock market, because the S&P 500 is made up of the top 500 largest market capitalization stocks in the U.S. So you got Apple, Microsoft, Amazon, Google. Those all make up parts of the S&P 500. So if you look at those and they're performing really well, that's a good indication of the economy, the U.S. economy. So you have Bill Clinton is number 1. You have Barack Obama is number 2, 182% return. You have Eisenhower, Republican president. You have Ronald Reagan. You have Harry Truman, which that one's a little skewed because the S&P 500 it was very new then, and I actually think that's a Dow Jones stat from what I'm reading. So if you can kind of exclude him, and Donald Trump. Donald Trump is actually ranked 5th out of the top presidents, or out of the stock market
so
returns from the last.
I just want to jump in here. So if we look at Nixon, I don't know why Nixon's was so low. I'm wondering. I haven't looked into this. Did it crash when he was impeached? Is that what happened?
It could have. Well, there was a lot of things going on then. You have the Vietnam War. You have the school shootings, the Kent State school shootings, where the military was dispersed to a university and shot some students. You had a lot of chaos going on.
Yeah.
The civil rights movement.
Well, I was I was just going to try and draw a parallel. What we've seen recently with Trump, and are they going to invoke the 25th Amendment? Looking at the data here from Nixon, I was wondering if he got impeached, and let's say Trump gets thrown out with the 25th Amendment, are we going to see a huge stock market crash? Because you can see on this chart, Nixon had a negative return. I don't know the reason for that exactly.
I don't think. Yeah, I see what you're saying. I don't think it's gonna. There's only 2 weeks left. So I don't. Oh, sorry. There's only 2 weeks left, so I don't think that it's really going to matter that much at this point.
Oh,
If it
okay.
was like a year left, maybe. Um,
Okay.
it seems the stock market's preparing for Joe Biden right now. So, but the final take is that it doesn't matter who the president is. Just keep investing, because we've seen over all the data we have, the stock market's always going up. Sometimes it goes down, but it's always going up over time.
Alrighty. Yep.
So,
So
one example I wanted to give actually is if you invested $1,000 in the stock market in 1945, you would have gone through at least 10 presidents to 2019. That $1,000 would have been worth $2.3 million
yeah, that's insane.
by the end of 2019. So that just goes to show you it doesn't really matter who the president is. You're going to make money.
Yeah, I agree. So with that, we're gonna wrap up this episode, guys. Don't forget to
Yep.
subscribe, leave a like and comment. Also, don't forget, if you start investing, use our links in the video description below for free money and free stocks. And until next time, thanks for listening.
Thank you.